into today's category though about why to become a homeowner, or we can say, or why not? Because a
Or
lot of those are why
or
not?
why not
Yes.
now?
Now,
Why
exactly.
why not
How
now?
Why
to
not
prepare
now, right?
Because
to
if
be a
you
homeowner.
cannot feed the cattle, you don't need land with cattle and goats. You do not.
No,
If you can't
it
heat the
sounds
house,
good, but I mean, we all want, some of us might want flying cars, but
It ain't happening right
I
now.
mean, it's
and
never
even if it
Maybe in the
was, do you
works,
need it?
but just not right now.
yeah.
Yeah.
So I think it's all about counting. You got to count the cost,
Mhm.
as any wise person would, right? You got to count the cost besides, what you're paying to
Right.
have this thing, because hopefully, people have moved from a place of, being a renter is somewhat a good introduction to
Mhm.
home ownership, in that you have to, if you, depending on where you rent, you may have to pay your own light bill, your own electricity, your own water, but you don't know anything about when that water heater breaks, or
Right.
that
What happens?
pipeline freezes. It's like there's not this ubiquitous repair person in the sky
Right.
So the
that
AC goes
that
out.
requires nothing of you,
Mhm.
because it costs money, right? And so,
Well, but for
um,
everybody who's ready to be responsible, I mean, there's a bunch of course, there's a bunch of why nots. Why
Mhm.
not to do it? But I think the list of whys
mhm.
is probably way, way greater for
All right,
everybody,
okay.
including
So,
everybody who's renting
who wants
right
who
now.
wants to introduce their number one reason why it is a good idea?
It's an investment. It increases your net worth. It
Yes.
also sets you up for, um, the whole levels of it, like starter home, second home, third home. Then you downsize. It sets you up for retirement in a way. Essentially, if you do it right, your last house, you should either have a very, very small mortgage on it,
Mhm.
like 5 digits or less,
Yep.
or it's already paid off because you sold all your other homes and used the equity in it to buy your last home cash. So if you're thinking about, retirement 65 and up, are you going to want to work? You're going to have to be bringing in some income to pay mortgage or rent.
Mhm.
So if you never owned a home, you're definitely going to be paying rent, and who knows how much rent will be with inflation in
Right.
decades from now. So it's really, home ownership is a mindset, even before the financial part of it. When you get approved to get the cash, you have to have the right mindset to look at the right things to buy and understand the long-term, impact on that. So
Right.
Yeah. I would definitely say when I think of it, I think of legacy and financial leverage
yes, legacy keys.
on this,
Mhm.
on the same level of having something to pass down, because we always talk about we want our kids to not have the same struggles that we did. But if we're properly setting them up, not only can we teach them these tools, they're kind of like walking in the steps of doing it the right way without less struggles, especially with the way society is changing, the cost of the home, interest rates, having something to pass down, and then they can start to build as well, and then teach that to their kids, and so on and so forth. Even the same thing of being able to sell a house and buy the next house. That's your financial
Yep.
leverage to kind of keep going up that ladder to kind of live the life that you want.
Yeah.
Right.
I think that's the biggest one, is that it's financial leverage.
Yep.
And I like what it just says about it being a mindset, because I think a lot of people enter home ownership thinking, I need a place to live.
Mhm.
And that's a reality for a lot of people. I don't want to pay rent anymore, and I need a place to live. But while you're in that process, it's great if you can be in an environment that also teaches you, because I gave a talk this weekend, and I said, when first time we bought a house, the only thing on my mind was I didn't like somebody else being in control of where I rested my head at night,
Or how many
and
pictures you can hang on the wall,
how many
or
pictures you
what
can
you
hang on the wall, what
or what
color you
color
can
you can
paint
paint
it,
the walls.
and whether or not I can have a dog, a cat, a hamster, or a ferret.
And then you charging me a
That
fee
was
for that too.
that
Yep.
was that was my
That's extra.
main that was my main focus. and it wasn't until years and years later that it became apparent to me that home ownership is also a tool for financial security, as well as a stepping stone that can lead opportunities for wealth building and real estate investment opportunities.
I mean, it can
So
change the trajectory of a family's future seriously.
yes,
Just that one person.
Yep.
of generations. Yeah. And
Yep.
I love, I love that we've got so much technology at our fingertips to be able to spread that message. I see how that message is reaching our communities more and more. And
Right.
unfortunately, that has made home ownership more and more expensive.
Yeah.
And so, but still, well, I mean, I still think, it's the best opportunity to change the trajectory of the financial trajectory of generations for sure, to come.
Yeah. I
Yeah.
agree. And there are
Yeah.
side benefits too, like some tax write-offs. Like you get
Mhm.
to do some other things, besides being able to paint your own walls. You do get some benefits at the end of the year. I mean, that was a big one for me though, because you have to live in something sterile for a while or pay a
Mhm.
fee to
Yeah.
do so, or pay a fee to bring your dog, not even just a one-time fee, a darn monthly fee. Like
Mhm.
you got to
Pay,
pay rent,
pay
you
rent,
pay rent
pay-
for the dog.
Yeah.
right. Hmm.
Yeah. So there are some added benefits, I think, as well. I mean, the biggest one is like you all said, is the legacy piece of it and building the financial wealth for your family's future. But
Mhm.
just on a daily and yearly basis, there are some benefits as well.
And how about the mental aspect of it, feeling this is mine?
Mhm.
Yeah.
That's a big accomplishment that you get to kind of call the shots and then you get to now literally see your hard work.
Yep.
That, that changes your mindset because it now opens up a world of possibilities just from you having faith, putting in the work. That's a
Yep.
big part of that people kind of overlook. It's
It's a
amazing.
big sense of pride for sure. It's a
Right.
It
big,
is. It is.
I knew, all I knew was that nobody could show up on my doorstep one day saying, we are selling it, we're raising rent, and you got to go.
Right.
So
Because how many
that was
people do we get that happens? Like you get a
Yeah.
call and they're just like, my landlord decided he was selling and he told me I had 30 days to get out.
Yeah.
That's a horrible
Very
feeling for
often.
somebody. And now
Yeah.
you got to get your mind right to try to get a mortgage and find a house. It's something that's probably going to be way more than what you're paying right now, just unexpectedly. So yeah,
right.
that's a big one as well.
One quote that I always liked is, it's not just owning the home, it's owning a piece of earth. So you actually own the land that your house sits on. When you buy the house, it's more than just the walls and the structure itself. So and again with the
Land is some of the best real estate you can own.
absolutely.
Yeah, absolutely.
It is the best real estate you can own.
And let's talk
Yeah.
about like appreciation, because I know some people that don't understand home ownership and why it's an investment and how does equity work. Just ideally speaking, let's say you buy a house for $300,000 and next 5-10 years, it basically goes up to like $400,000. So each year, the property value increases based on demand of buyers buying houses around you. So every time somebody buys a house, if your neighbor sells their house and they sell it for more than what you bought yours for last year or whatever, that adds value to yours. And then they do it again next year and then next year and then next year. So eventually you look back and you're like, wow, this was a great investment. This was great. Versus you spending, let's say, $1,200 a month on rent. That's like $14,000 a year. $14,000 a year.
That's no small sum of money.
And
It
to
is.
add to the equity part of that too, because it's not only to what people are buying, what they're paying for, what drives that price is the community you live in.
Right.
What's being built, school districts, the level of crime, like when you're moving to a decent area or not, those are the things that also affect how much you can actually obtain from that house in equity.
Yeah. I mean, you're literally living in a piggy bank.
Yep.
I mean,
Yeah.
literally.
You are. You are.
You're literally living in a piggy bank because, every mortgage payment, you've got to pay back that principal and interest, but you're chipping away and you're making a deposit in your equity bank, each time. And, well, okay, well, I got to do upkeep. I got to do improvements. That's a deposit in your equity bank, right? And so you are literally living in a piggy bank, and every dime you spent is making a deposit in that equity that you can leverage. You can leverage that equity in order to do other things. I mean, if you're sitting on a bunch of equity and you're paying, even at the rates today, if you pulled out some equity and put it in a nice index fund, the amount of return you're going to get year over year versus what you're paying in interest, that difference is you're still coming out ahead, right?
And that's another, yeah.
And again, the education portion to that, because it opens up your mind to an endless amount of possibilities on how you put yourself in a better financial situation. I mean, at the end of the day, we're all chasing financial freedom.
And
nobody wants to work forever.
Sarah and Lisa, mortgage brokers, besides helping you get approved for buying your home, they can also help you with refinancing your home, or a HELOC on it, meaning an equity line of credit. So the equity that you have in your house, you can take it and buy another house for an investment property.
Or even repair. It's like a personal credit card. When it's like a HELOC, your possibilities are endless. And for like our older people who have kids going to college.
That's a big one.
That's college. You have a lower interest rate on that than probably taking out student loans.
Right.
It's like the options are like
the possibilities are endless.
It's insane.
And
once
sometimes
you own your own,
they get afraid because they're like, well, what if the roof, and then what if the HVAC goes out? What if this breaks? Well, there's the opportunity there where your real estate, your house itself, it regenerates the profit, for you to be able to make those repairs and updates. And about interest rates, when Lisa was talking about the interest rates, renters pay 100% in interest. So if you're running away because you're hearing of 6-7% interest rate, stop running, slow down, pause, think about it. That is actually average. That 3% that people were raving out about years ago is like the historical low. Will it happen again? Who knows? But very less likely.
Very unlikely.
Yeah, but at this point, like you said, they're paying 100%. They're getting nothing. You're not building any kind of equity. You're not building a legacy for your family. You're not able to write off any taxes. Like, you're basically getting zero. You're getting nothing. At the end of the day, and at the end of the year, after you've paid, $2,000 a month around these parts, $24,000 a year. Like, that's a car.
That's a lot.
It's a lot.
And you're not getting nothing back.
And it's not a deposit. It is not a deposit. I mean, if you hold up, if you hold up, a $2,400 a month rent versus a $2,400 a month, principal and interest payment, that principal and interest payment is a deposit into your equity account. That rent, I mean, that's technically a very expensive carefree lifestyle.
I mean, and basically you doing that for somebody like us.
Exactly.
Like, you paying off our mortgage.
Basically, yeah.
So,
you're paying mortgage, definitely.
Thank you, but you want to do that for yourself as well.
Right.
Yeah. So that you can do other things.
Yeah.
And have that money available.
And funny thing, it's like, well, I can get a car, can get a house. It's a little different, but those interest rates on those credit cards and cars and things, they're typically higher than your mortgage rate.
It literally, people don't think about that too. Why is it okay to pay 19.9% or 26% on $2,000 credit card?
That's crazy.
To pay 7.5% on $250,000 when you get to live in it however you want, do whatever you want. The credit card companies, you can't do what you want, because once the money's gone and they looking at you like, where's the money?
Right. Your payment due yesterday.
So same thing with the
paying
cars
and they let you borrow.
I tell people, you can't compare buying a car to buying a house, because once you drive off that lot, that car is not worth even half of what you just paid.
Correct. That
And
is
if
correct.
that car messes up, insured or not, you're on the wear and tear. That's your responsibility.
Yep.
So there's no, oh, I can dip into my car loan to pay off the repair. You can't.
You can't do that.
Mm-mm.
Yeah.
And cars are constantly changing. You're not even gonna want that after 3 years. Then what
Right.
you gonna do? You know?
And you still gonna be paying on it at 70.
You're better off.
just as
You
fast
may
as
be better
iPhones.
off leasing it
Right.
if you're a person who gets
Yeah.
tired of it quickly.
Right.
Look, you know
and a
me, I
lot of
drive my
these-
car till about, look, my Lexus had 350,000 miles.
I know until the wheels fall.
And there was
off.
nothing wrong with it. I ended up selling it. A lady bought it. There was nothing wrong with it, but I'm gonna ride it until
That's
I
right.
can't. Because
That's
I don't
right.
even like that monthly payment. And I probably need a car now, but guess what? I ain't doing it.
Mhm.
I'm just not.
Yeah,
I'd
it's
rather
all
have a house.
it's all about the mindset.
Yep.
Legacy building. The other thing I like about legacy is it's sometimes time to break the chain.
Mhm.
You know, if you come from a background of people not owning their houses, start it. Be the first. Like be able to live that journey so you can teach your kids how to do it the right way and they can teach
Yep.
theirs and so forth. So
And
Well,
it's
can we shift a little bit about why you should not or when you should not buy a house now?
okay,
Because we're
mindset.
all in agreement that you should be a
Yes.
homeowner.
So
But-
if you're a renter and you don't pay your rent on time and you find yourself getting evicted, you're not ready to buy a house,
You're
because
not.
if you buy a house and you don't pay the mortgage and they foreclose, that is going to follow you forever.
Yeah.
I mean, it is not good. So it's definitely, you need to know that you're ready to do it.
Correct.
It is a great investment, but
Yeah.
you can't just be like hopping out and just not paying.
Correct.
That, yes.
because we see all that stuff gets reported on your credit.
It does.
Thank you. And thank you for saying that, because there are people who will come and think that, I mean, and Aisha and I may not see it, all the stuff that you've done in your past. But when we send you to Sarah and Lisa,
We
they're
see
gonna
it.
have the big picture of all the things that, I mean, like I had one lady that I met at this new home builder and she was ready to buy. She was in there looking. I called her, the lender called her. She had 20 cards that were in default. 20. So yeah, I don't know that. So I'm going to give you the information that I can, but by the time she comes to y'all, the information is not secret. They're going to find
And
out.
I think people, they want to watch, the DIY channel and he's a school teacher. She teaches art. Their budget is $2 million.
Right.
Like, no, you need
Right.
to have an understanding.
You're like, that's TV. It's TV. They can
Not
do whatever
only-
they want
Yes.
to do.
Oh my gosh.
It's TV, and people a lot of people don't have a realistic idea of what it takes to get there. So one, if you can't manage the credit cards you have and paying your rent on time, then
Yep.
you're not ready. You need to have that mental mastery to know
Yep.
when I get paid, my rent is paid, I put up money for savings, I have insurance policies, because you have to keep these things insured.
Correct.
That's
Yeah.
another bill, whether it gets fed into the loan or not. Am I saving for a rainy day? Am I saving for an emergency? You have to kind of already be built like that and financially ready before stepping into the big leagues of buying a home.
You
Yeah,
gotta have that financial literacy. You gotta understand how money and credit work. And if you can master your credit cards and you can master your car loan and still put away a couple of dollars, then your mind, you're connected. You've got that connection with your finances, and you can make a better understanding of what it takes to buy a house. But if you don't have an understanding about, oh, it won't matter if I pay my card this
Right.
month. I'll just double up next month.
But I
No.
think that comes from like all of us, even with the people that we meet who do have issues, it's beyond an education. I mean, some of them we have to handhold, because there are some people that I've come across that make good money who still say they can't buy a house. And when you send them over and you look at their bank statements, by the
Yep.
time that you look at all the automatic subscriptions that they have coming out, all the nights that they're going out to eat, the drinks and
DoorDash,
brunches that they're going,
Ubers.
like you could afford a house twice the size of what you thought, but your money is doing, it's not working for you. It's actually working against you at that point.
Yep.
It's the discipline of the budget. Discipline of the
Yep.
budget. Mhm.
Absolutely.
Yeah. Yeah, and I think, we get so much contradiction in media and just media as well as society. It's like, live your best life, but buy a house,
Well, you have to figure out where that fine line is for you, because at
You
some
do.
point you're just gonna have to
Yeah.
say no to your friends. Like, I can't do
Right.
that this week because I'm saving my money for, or no, I can't go out to drinks this week because I'm saving for this bigger thing. But society does do that, and peer pressure is for real. But
Yeah.
sometimes you just have to say no
Mhm.
Yeah.
if that's what you truly want.
Yeah,
Yeah.
that's so far as why not and realistic expectations.
Mm-hmm.
So this is another one of those things like, okay, you want those 3 to 5 acres for the cattle and a 3-story home, but are you going to be able to afford the mortgage payments for that? So sometimes, because we want to keep up with the Joneses and impress
Mm-hmm.
people and not focus on investing in our survivalship, you don't want to buy a house that you're not going to be able to afford to pay the mortgage on. Even though you want this big house, do you know what the mortgage payments are like?
Mm-hmm.
Whereas
Right.
to you can start out with just to start a home, meet your needs, and then your next time you can get up to that level.
Right.
But that's one of the hardest parts, believe it or not, price points from 150,000 to $1 million. And I'm talking North Carolina, let's be
Mhm.
clear. It doesn't matter. Most clients you work with, no matter their budget, even if it's a big number, it's all about being realistic with what you can afford.
Yep.
Because most people don't want to max out their approval amount. Just because you
Right.
get approved for $500,000, you don't have to go spend all of that.
Mhm.
Yeah.
Yeah.
I will attest to that. When we got approved for our first house, we got approved for a heck of a lot more than what we needed. And we were in this probably prior 2008 when the mortgage industry was about to blow up. So I'm glad that we surrounded ourselves with wise counsel. And this person said, when you go in there, they're going to try and get you to borrow more than what you need. Don't do it. Don't do it.
Yep.
And
Yep.
and I always give the option and encourage people to find what is comfortable
Mm-hmm.
for them.
Mhm.
But when we bought our first house, we were approved for more than what we needed. And I had this, as much as I wanted to buy my first house, I had this inherent fear from, seeing the housing market crash and people going into foreclosure after foreclosure because they could no longer afford these houses that were
Yep.
being literally thrown at them.
Yep.
And so we made an intentional decision on our first house to keep it modest,
Yep.
and understand that is not our forever home.
Correct.
It's not our dream home.
Correct.
And just stay smart about our finances so that we could be successful homeowners. And I think that when people, if you aren't ready to understand and put into action these steps and the practices and the habits that will make you a successful homeowner, then you probably don't need to buy into a lot of what the media is saying as far as like buy now. The buy now messages that Sarah and I promote, we promote it to individuals who are ready to become homeowners, because I want to create successful homeowners. I do not want to create a bunch of default homeowners or homeowners who are miserable because they're just house poor.
Right. And that's definitely not what we want, is for them to be
I was gonna
house
say
poor. And that's a conversation that I have too.
Oh,
because
yeah.
you still want to be able to live
Yeah.
And
or
to
do
that
something
point,
every now and then.
that's something I push when I do my home buying consultations. I tell them, I'm not about to be pulling your credit. You're dropping 20 points and then you're not ready at all because I didn't talk to you. Which is
Mhm.
why when doing the application, it won't even pull your credit until you talk to me. So I
Right.
can really get an idea of where you stand mentally, financially, spiritually, just overall, and kind of come up with a plan for those that aren't ready. And if
Yeah.
you can follow that plan, then we'll be good to go within X amount of time. I
Right.
think another thing too, the do's and don'ts with the don't of buying a home is ask questions. Don't just go with your first banker you spoke to. because I've been bank, and again, nothing against banks, I guess. You know, I've been banking with this bank for 15 years and they send me this offer in the mail and now they're gonna just give me a bunch of money. Oh, I got pre-approved for this. And I'm like, but they see how you're spending your money
Right,
all the time.
right,
Are we even marketing people in that kind of way? Because it's not cool, because they think, oh, well, I got this offer, so I must be doing good. Not realizing you didn't gave the bank $400 this year in overdraft fees.
right.
Ooh,
Well,
No,
because they're not looking out for their best interest. They're
they're
just trying to
not.
write a loan.
Exactly. And you're getting rep number 24 on the phone, and you hang up and you get rep 38 the next day. So I
Right.
tell people, they're not in it for you, they're in it for the money. That's why they're a bank, or
Yep.
why people are working for the bank. It's
Yep.
not realistically to help you, it's to help them.
Correct.
It's who you're talking to. Don't just go with the first offer. Ask questions. Whether it's, if you don't have family members that bought homes before, ask them if they know people, co-workers, kind of like make sure you're doing yourself the due diligence to put yourself in the right situation.
Right. I agree.
Because you don't want to get to the closing table and you can't buy a house, because that just happened. That happens
It happens.
a lot, believe it or not, because they're not teaching
They're
you.
not they're not educating them. They're
not.
just trying to get them a loan,
Mhm.
right.
even if
Yeah.
they just squeak and by.
Yep. And it's
Yeah.
sad.
Yeah. Well, that's awesome. So
Yep.
I think we covered a whole lot on that subject.
I agree.
For sure. So we'll leave it there, because that was a lot about, whether or not, when to buy a home, whether you're ready or not, and when not to buy a home. But home ownership in general is a good thing. It's a good thing. It's financial security. It's a stepping stone to wealth building and investing. And we encourage everybody to talk to their realtor, their mortgage professional, even if it's just a chat about, this is where I am, this is where I think I want to be. How can we create
Yep.
a strategy to get there? And getting there can be a lifetime of getting there.
Right.
It doesn't have to be one and done. And it should not be, because we want to start and then we want to build to maximize over a lifetime. For sure.
Absolutely.
Right.
Absolutely.
Awesome. Well, thank you, ladies, for the conversation. We will pick up another juicy topic next week. So everybody, like, share, hit the notification button to see when our next episode comes up. And if you have questions, leave some comments. We'd love to see what everybody else would like to hear us throw up on the table, so we can keep it real. All right. Till next time.
All right. Thanks, ladies.
Thank you.